Coming to you live from our studio in Atlanta, Georgia, this is the A1 Trading Daily Show. Whether markets are rising or falling, we're here to keep you up to date with the latest market news. Join us as we trade currencies, commodities, and indices live, Monday through Friday.
Good morning, everybody. Welcome back to another live stream. Hope y'all are having a great day so far. We're going to jump into the markets with Nick here in just a second. But before we get to that, I've got the watch list pulled up. I wanted to show this off super quickly, and then we're going to take a look at the market heat map. We have a decent amount of buys and sells. I've actually removed the neutral biases just so that we're left with our buys and sells. I left indices and commodities on here just so you can get a broad picture of what the edge finder is painting going into today. Again, like I said, we have a lot of strong sells, just one strong buy, USD ZAR at the moment. But let's check out the market heat map, see how all of our assets are trending so far today. I want to remind you that this stream is not possible without the help of our amazing sponsors, 8cap, Forex Tester, and Superfunded. We will hear more about them in just a little bit. But if you want to learn more about 8cap, Forex Tester, and Superfunded, you can find their links down in the description below. Thank you again to those three. They are amazing sponsors of ours. And again, these streams would not be possible without them. All right, so let's check out the market heat map really quickly. Right off the bat, I can see up top we have three euro pairs, Euro AUD, Euro GBP, Euro NZD right here. So euro pairs seem to be making a move to the upside, followed by German 30, NASDAQ 100, and USD CAD. Those are our six biggest movers to the upside so far today, with Euro AUD being the biggest mover to the upside out of all of our assets, up 1.04% on the day so far. Taking a look down here at the bottom, we have a lot of Australian dollar pairs actually, AUD USD, AUD CHF, and AUD JPY. So three Australian dollar pairs down here towards the bottom. NZD USD, GBP USD, and gold actually. Those are our top six movers to the downside so far today. Again, the market heat map is getting updated like every 15 minutes or so that as the market's moving, so is the market heat map. Aussie USD is our biggest mover to the downside, down 1.4% on the day. All right, that's it for me. Now let's go ahead and jump into the markets with Nick.
Thanks, James, for that great opening. And just a little bit of following up with what James was talking about. You have some really interesting moves happening prior to the actual retail sales numbers, which we don't usually stream. Shout out to my team for getting here early for this news event. This is outside of our usual work hours. So we're experimenting here. We're trying to get earlier on the live streams to cover some of these major moves that are happening in the market. Speaking of major moves, we have retail sales numbers coming out in just a bit here. We have 10 minutes until the news. What we're going to be doing here together is we're going to be going over some setups and ideas that could play out following the release, as well as how things are looking prior to the release. Let's go ahead and first of all cover what we're paying attention here today. We are talking about the core retail sales, as well as the retail sales numbers that will be coming out here in just 10 minutes. Again, today's numbers are expected here in terms of core retail sales, which excludes the automobile component or sector to it. It's the change in total value of sales at the retail level. If you think about it from a really simple economics standpoint, if you have more people out there buying products, spending money on services, that sort of thing, that would generally show signs of a healthier economy. Whereas if you get an early look at this and it's all sort of bad and not a lot of spending going on, a lot of things slowing down, that could cause some real fear factor to introduce itself into the market. So we're going to be paying attention to two main assets today. We're going to be talking about the dollar and its relationship to currencies and gold. And then we're also going to be talking about the indices as we go into this release. Now, here's a little bit of a heads up. We are forecasting to have a 0.9% release here. This is the consensus, at least from analysts. And then you have also in retail sales, which again excludes includes the automobile section, you get a nice 1.9% projection. And so as we go into this, we are going to be looking to see how things are impacted by the actual number, which has yet to release. When this number comes out, you will likely see some volatility in the markets. That is up in the air how much it is, depending on how on or off the projections are compared to what actually gets released. Now, here's what I want to say in terms of retail sales. This is, again, it's an important factor. It's looking at consumer spending and knowing how much they're out there buying products and services. So I wanted to turn our attention here to the current charade or operation going on the US dollar, which is a March higher prior to this event. Now, I will say this is also off the back of yesterday's CPI number, which came out hotter than expected, caused a lot of stir on the initial release. Some of you guys watched the release with me if you were here for the live stream. Shot to the downside, followed by a revamp right back up, and now pegged up against the top of this range here, as you've got multiple tops forming here on the 4-hour chart for the US dollar. Again, we are looking at DXY. This is a reflection of the dollar against the main other core currencies out there, the euro, the yen, etc. Now, as the dollar creeps higher and pokes up into this 103.75 mark, it beckons the question: if the numbers come out and cause a pop to the upside there on the dollar, is that going to follow through? And I would say that there's a strong probability that if we can break through this level, there's going to be possible opportunities to continue to see that dollar fly higher. Why is that? Well, we just had CPI numbers came out higher than expected. And then you also have this: if it comes out with anything that causes the dollar to spike to the upside and break through resistance, the dollar looks juicy, in my opinion, for some trades. Now, let's actually talk. We've got 5-6 minutes here before the actual spike. Let's talk a little bit about setups that I actually like when talking about DXY. And I want to make sure I get to gold for a lot of you guys who are asking about gold. We will get there. Don't worry. We're going to start with the euro, see what's going on with the euro first. Now, this one is a little bit sour for me. It's a little bit painful because I wanted to get short on this thing at the 38.2%. And I missed it. I wasn't able to grab the trade in time. And unfortunately, it left me behind. The dollar has been so strong, pushing us right back down towards the lows. And again, for the most part, the Edge Finder has been calling for dollar bullish setups. If you guys were here yesterday, then you know, if you watched my video yesterday that we put out, the dollar yen trade ended up closing for a profit. So we made some money on the long side of the dollar. And going into today's report, we're going to have to see how things play out. But very overall bullish across the board on the US dollar have we been on the Edge Finder. So very interesting to watch. Specific to the USD pairs, we are looking predominantly for long side setups. When it comes to things like euro dollar and pound dollar, I'm looking for pullbacks. And I feel like I'm a broken record because I couldn't get that trade yesterday. I shouldn't have closed that. That was a mistake. We'll have to open that up. No worries. I feel like it was a bit of a bummer yesterday because I missed that entry. I wanted that 38.2% retracement, didn't get it. So today it's kind of like, is there going to be an opportunity for me to join in on the move? Honestly, that 38.2, I know I sound like a broken record, but that is where I shoulda, coulda, woulda gotten into the trade. But that doesn't get you very far in trading. So if we double back, if we see price swing back up into that 38.2, I may still look to try and enter it. So this one's kind of washed away from me, but we'll keep moving on and see if we can find something. Pound USD, same thing, man. Feeling the burn on some of these dollar trades where I feel like we called this very well, but unfortunately, the entries and exits did not play out very nicely to us. So I missed some of these trades. And then my dollar yen trade, just to add salt to the wound. Look at this, you guys. I caught dollar yen on the long side and got stopped out, unfortunately, just in time on this orange line. This represents my stop loss, just in time before it rallied higher. So you know what? Yes, you can look at this and play the victim game, but that doesn't get you too far in trading either. Let's think forward. If the dollar yen pulls back, maybe I get an opportunity to join the move. And you know what? That's not the end of the world. If you're only ever looking at the market like, oh, it's out to get me, you'll never actually be profitable. Trust me, it's a bad way to look at the market. Market doesn't care about you and I. It's just doing its thing. And so if this market pulls back, I'll look for a possible re-entry on dollar yen. This is probably my favorite of the dollar crosses right now, as it gets a bullish setup bias on the edge finder. Again, a real quick look at this, and you can see USD JPY getting that bullish rating overall, +3. COT data very heavily, and this is what I really like about it. Smart money is very long the dollar and very short the yen. Knowing that big money is generally positioned in that direction is a confluence factor that I really like to have in my trading. If you don't use the Edge Finder and you want to try the free version, we do have a free version now available. Right now in the chat, we're going to drop a link to that free version. You can get access to our software, again, 100% free. You just fill out the form and then it sends you a copy. So just fill out that form. We're going to drop it in the chat for you, and then you can get access to that. So yeah, dollar yen, like I said, this one is predominantly what I'm paying attention to. We've got a few minutes here before the release, guys. I'm going to pull up gold for those of you guys who are watching it. And honestly, gold looks bearish, right? Going into this release, I have to be honest, it does not look super optimistic. Now, can it swing back on the news release? Sure. But primarily, this 4-hour chart looks really ugly. It looks really, really sell heavy. And until something changes, the directional bias on gold is to the downside. We are trending lower. And, at this point, it's hard to deny that you've got a downward trend going on. And so until that cracks, I'd say sellers are in control here. So I don't necessarily have a bunch of bias on this one. It's not showing up on the Edge Finder as a possible sell. So I'm probably not going to be selling it. Actually, I take that back. Look who just entered into the operation. We have gold sells showing up on the Edge Finder for the first time here. Very interesting to see this. I actually haven't seen gold on the sell side in a while. Let's pull this up. This is really, we have to stop everything. Hold everything for a second, guys. Let's pull up gold. Coming in with a sell bias here today. Hello, Mr. Gold. COT data goes against us. That's by a little bit. You have institutional money still long on gold. So that's a little bit of a red flag. Retail sentiment. What's the retail crowd doing? Oh, look at that. Retail crowd is buying gold. So the popular crowd is buying gold. And guys, we've got just a minute here or so to go. Let's go ahead and prepare a little bit for this release. Now, going into this, I'll be honest, I have, or not honest, I'll show you up front before. I do have a long position open on the S&P 500. This is a short-term trade that I'm in, so I will come back and check this out. We've got 30 seconds before the numbers release, and we'll have to see. Let's make sure we pull up our Forex factory. When you guys see the numbers, do me a favor in the chat, drop them for everybody to see as fast as you can. It's just a helpful thing. If you find out the numbers, drop them in terms of retail sales numbers. These are the two we're paying attention to. You have core retail sales and retail sales numbers. I'm going to pull up, we'll pull up gold here really quick. Actually, you know what? Let's focus on the dollar. We're going to just watch the dollar here on the 15-minute chart. We've got about 10 seconds. Let's see if what happens with the dollar here going into the release. Here it comes. If anything, we'll see if there's any sort of spike. And the dollar is up. Let us know if you guys have the numbers. Remember, share the numbers in the chat. Look at that dollar spiking to the upside a pretty good bit. Wow. USD JPY. Probably, oh yeah, pain, man. Pain. The trade that got away, right? Dollar yen, Euro USD selling off here. Wow, real big spike to the downside. What are the numbers looking like, guys? If you've got them, remember, drop them in the chat for us. Share with the class kind of thing. We'll see if we can get them up on our end. Oh, there it is, 2.3, higher than expected retail sales. A hot number coming in, 3% for retail sales and 2.3 for core. That's a big beat here, you guys, and causing the dollar to really get strong here. Going into the release, you can see a breakout clean above. And again, this is looking strong for the dollar case. SPX 500. Let's see any sort of reaction there. A little bit of a hiccup, but nothing crazy here. You've got the S&P not reacting too much to this, but the dollar, wow, the dollar loves this. And just a quick look at the treasury yield, yeah, flying high. Interesting to see that. And you've got the dollar breaking above. The question is, will it hold these gains? But wow, what a breakout there. Watch this candle, you guys. The hourly chart will be interesting to see as we try and break above the previous structure high there. Very, very interesting to see. 3%. Wow. Yeah, crazy. And again, 3% coming out for retail sales numbers with 2.3% coming out for core, which is really interesting because core excludes, that volatile aspect of the automobiles, right? And so you're still seeing a big jump in retail sales numbers here in the previous reporting, in this reporting, which is very, very interesting. S&P, how's S&P looking? Yeah, not doing a whole lot. Not really seeing much of a reaction there. Gap down and then filled it immediately. So not too much volatility there to pay attention to or to speak of. What about gold? Did gold do anything? Gold still shooting to the downside. Sellers still in control when it comes to this chart. Like I said, we now have a sell reading on the edge finder, which is very interesting. Have not seen that in a little while. And the one that sticks out to me pretty clear as day is that 61.8% retracement, which matches up nicely with past levels of support, could turn into resistance. So if the dollar, if gold gives us a pullback here, this may actually be a sell setup for me, which would be unique. I've not been short on gold and I can't even tell you how long. There hasn't been an edge finder set up for a long time on gold on the short side. Dollar yen squeezing higher and making that run up. Bit of a tough one for me. Again, like I said, I caught most of this trade, but then got left out for the party. So it happens to the best of us. It happens to the worst of us, happens to all of us. It's just trading 101 is sometimes you get left behind. And is it painful? Yes, it is. Is there anything you can do about it? No. Actually, yes. There's a lot you could choose to do about it, right? You can choose to make dumb decisions and chase stuff, right? If I was looking at this dollar yen and I was like, oh man, I missed the trade and I don't want to run it, so I'm just going to buy it now, right? That might work here and there, but you're going to build a habit that results long term in probably a lot of pain and suffering as you just YOLO into trades and fire from the hip trading is not great trading. I can tell you that. Yeah, dollar just looking so strong and breaking through the highs. Let me look at euro dollar. So euro dollar coming back down to the lows. I will say this. Of course, I wanted the pullback, but I'm not above the idea of looking for the break and retest. So if we can see the dollar come down strong enough to actually break support, pullbacks are still something I'd be interested in on the long side. So we'll keep an eye on that. But like I said, not opposed to this idea of looking for a break and retest kind of opportunity, shorting the dollar. Shorting the euro. Gold showing up here, like I said, on the edge finder, very interesting to see. What else? Anything else on the edge finder that I really like? We'll double back and take a look at the indices. USD CAD might be of interest. I bet you USD CAD is getting close to trying to break that structure that we had marked up. Let's see. Dollar CAD? Nope, not quite. I was thinking if we could get the breakout, there might be a retest opportunity on dollar CAD, but not quite yet there. Swiss yen, how's that guy doing? We talked a lot about Swiss yen recently. Still flying higher, and Frank and I both missing that trade a little bit. Actually, I don't think Frank is in that trade, but I could be wrong. If you guys aren't already inside of our Discord channel, what I'm referring to is that Frank and I share all of our trades. Frank is my right-hand man when it comes to trading. We've been trading together for the better half of a decade, but not quite a decade. We've been trading together for a long time, and he's inside of our Discord channel, sharing all of his trades, as well as myself sharing my trades. I'll show you what that looks like, just so you can get an idea. If I take a trade, I share it within the Discord for everyone to see. Two things you should know is we have a paid version where you can see all of everything unlocked, but we also have a free version that might be interesting to you as well. We share ideas each day, coverage, keep you up with the latest when it comes to Forex markets, stock markets, that sort of stuff. If that would be helpful to you, then right now in the chat, we're going to drop a link to the free Discord, which thank you to you guys behind the scenes helping us out with that. They just dropped that link for you. So click that link, and then you can get access to the Discord channel that we offer for free. And so Frank had his eye on Swiss yen. So we wanted it long, but you can kind of see where we marked up. It seems like recently it's been a lot of missed trading opportunities, which is truthfully, it is frustrating. And it doesn't matter how long I do this. There's still times where it's like you do your research and you're like setting everything up and you're like, I want to, for example, like let's say you want to buy the S&P 500. And just as an example, let's say you had everything marked up and you were going to buy it right here. And then this sort of stuff happens, right? It's going to happen. And it's a bit frustrating. And doesn't matter how long you do this stuff. Nobody is exempt from the market trailing them out too early or leaving them behind. What masterful level traders do is they don't pretend they don't have those emotions. They have them and they face them head on, but they don't make changes to what they're doing based on those emotions. I hope that that makes sense. But a great trader still feels FOMO, still feels humiliation when they're wrong, still feels impatience, still feels all of those things. The best traders in the world feel those things. The difference is they don't act on those things. It's kind of like if like your relative at the table is saying something to you that is getting under your skin. A reserved person will hold their tongue because they know their family and they need to do the right thing. Somebody who can't hold it back and fires from the hip might say something that causes stir in the family. You know what I mean? Like, the point is, everyone experiences that, but there's a level of professionalism when it comes to this stuff that professional traders utilize that unprofessional traders do not. And it's really that simple. You've got to be able to stay disciplined with this stuff. Otherwise, it is an ugly place to play. Like I said, gold looking really bearish. 61.8% retracement would be interesting to me, but we are far from that. Let's see if we can find anything else. AUD USD, what is that one doing today? The Australian dollar, look at that, tanking to the downside. And we've got to ask ourselves, where is there a setup here that we might be able to join on the Australian dollar? And there might be a way to trade this more on a more granular level. We could take our swing high from that spike on CPI numbers. You could possibly make an argument for something like the 50%. This level looks actually pretty good, right? So you've got a 50% retracement, still a ways away. So you're looking at, from here, 67 pip rally before some sort of sell interest. But I do like this one on the sell side. So the Aussie dollar looks good if we can get it. Pound USD. Pound USD, we're going a little bit more granular to see if there's any sort of intraday ways to join in on some of these moves. Still, employing that patience level. I think you got to wait for, in this case, another 50% retracement level on the pullback should be something I would be paying attention to, but still a ways away. And again, my favorite two being the euro dollar and the dollar yen. But euro dollar, I've mentioned, I'd like to see on this one a break through the lows and then retest before entry. Dollar yen. This one, as I mentioned, kind of getting a little bit closer in on the price, going here on the 1 hour chart from swing low to swing high. I'd like this 50% retracement as well. So lots of dollar crosses that, like, if it gives you that 50% retracement, I really like it long. Dollar yen or short pound dollar, short euro, but can't do anything with it up here. There's nothing for me to do up in this area. I can't short it because, again, I don't go against trend. Trend is to the upside right now from the 1 hour and the 4 hour chart. But I also can't buy it because I wouldn't want to chase. So I'm waiting. I'm trying to be, again, going back to that word, trying to be disciplined here and waiting for that price. If it wants to, we don't have to see this, but if it does occur where we get a pullback here following this great run up, maybe there's a chance for some of the stragglers like myself to find a trade to be a part of. So that's kind of where I'm at with that. I'm trying to stay, like I said, just trying to stay patient with this, not letting my wantingness to be in these trades to get the better of me. I do have S&P 500 trade open, so I am floating. Let's see. We'll pull up the position on this. So I'm trading SPY. Let's see if we can just get an update on this position. Not a lot has happened with it. I am floating minus $100 on this trade. Again, yesterday's price action was all over the place. At one point, I was up a pretty good bit, but we have since pulled back just down to break even. So my position for my S&P 500 trade is just about flat. Nothing really has changed on that one here today, despite the dollar continuing to scream to the upside. And this is the weird thing that Frank and I keep talking about recently. If you've been on the live streams, Frank and I have discussed this a couple different times. The dollar is screaming higher while the S&P 500 is flat to also up. So it's kind of an interesting time in the markets where you see one go down and one go up, well, at least in the last year or so. But recently, we've seen a little bit of an agreement by the two, which is very, very unusual. Again, retail sales numbers came out this morning. For those of you who are tuning into the stream a bit later, they came out much hotter than expected, both in the core and just regular retail sales numbers today, and causing the dollar to spike to the upside. If you're wondering what the heck just happened to my charts, that is why we see on the 15-minute chart a good view of what happened to the dollar. We broke clean through resistance. And like I said, as we've been discussing, all I'm going to be doing now is looking for pullbacks primarily on the dollar, as they are lit up all over the edge finder right now. So lots of edge finder bias to the upside on the dollar. And again, part of the reason for that is, let me see if I can find what I'm looking for. When it comes to like the Fed tracker, right? Here's maybe a good chance to take a look at this. Maybe not. It seems to be having some issues. But what I do want to point out is that in terms of inflation forecast, right? The inflation number is expected to come down, but when you get a hot economy, right, it causes a lot of bullishness in the dollar right now, because the Fed kind of wants to see stuff cool so that they can start pulling that rate hike or rates down eventually. But if the numbers are coming out screaming red hot, it's lending more towards, well, they haven't seen their goal, which is to sort of crack that hot, that jobs number and that sort of thing. That's kind of the primary goal. They don't want to crush jobs. They just want to see them calm down a little bit. They want to see spending calm down a little bit, housing, that sort of thing. And so when we are sitting around waiting for that, when you get numbers like today, where it's the opposite effect, it's natural to see a bullish spike on the dollar, as people are saying, well, they're not going to have rate cuts anytime soon, when you get strong numbers over and over from reporting like this. So that's kind of where we're at with that. Guys, I want to take 1 second here to thank one of our sponsors. We're going to flip screens here, and James is going to go over one of our latest sponsors, Super Funded, which will allow you to get funded if you are somebody who's trying to find a prop firm. Check this out right after this. James, take it away.
Guys, I was muted. I had my mic muted. I'm sorry. All right, let's start this again. Here we go. Thanks, Nick. A1 Trading is excited to finally announce our official partnered prop firm, and we've got a pretty awesome offer for A1 Trading fans today. Super Funded is a new prop firm to enter the space that is looking to fund profitable Forex traders. If you have the skills but lack the capital, Super Funded is the answer. With Super Funded, traders are able to take an examination to prove their trading skills and have up to 90 days to pass that examination. Super Funded is ideal for both swing traders and day traders. It even allows traders to hold positions over the weekend. Super Funded is a funding program powered by 8cap, created for traders by traders. If you're looking to get funded, check out their examination today and get a 10% off discount when you use code A1 Trading. So if you want to be funded by Super Funded, you need to take their examination, and you can get 10% off that examination when you use the code A1 Trading. That's the number 1 TRADING, A1 Trading. Click the link in the description to get started. Now back to the show.
Awesome. And thank you, James, for that announcement. The one thing, I don't know if you guys have, some of you have worked with mics probably from like the 2020 COVID days and, Zoom calls and that sort of thing. Microphone muted happens all the time. I do it like way too often on my streams. And, sometimes here's a little in on the content side. Every once in a while, I'll film a video and get halfway through the video just to realize, shoot, my mic was muted. And then I have to go back and act like I didn't just say all this again. So yeah, it happens, but thank you, James, for that message. And again, check out Super Funded down below in the description if you guys are looking for a funding program and also want to support the stream. That partnership, again, financially makes it possible for us to do these sort of daily shows for Forex traders. And again, thank you guys for just being here. It really helps us to continue to do this. Dollar pulling back a little bit with the volatility here today. You can see that price is spiking above, but then now pulling back here intra candle. And we've got about 15 minutes on this candle left on the DXY. So we'll have to keep an eye on how this thing decides to close. But like I said, you guys know my position. I'm bullish on the dollar right now. With latest numbers, things look really red hot. And hey, it puts the Fed in a position where, it's like, they need to raise, or they don't necessarily need to raise rates per se, but how long are they going to keep those rates very high? And what is that going to do to, the dollar? It will likely be sort of a catalyst. So as we break above this level of resistance, we have to mark this as potentially demand now. So I'm going to keep an eye on the dollar here. My specific ones that I like are dollar yen and euro dollar. If I take those trades, you will see them lit up in Discord. If you're not already in the Discord channel, we dropped the link earlier, but one more time in case you missed it, grab this link in the chat and you can just fill out that form. It'll direct you to join our free Discord channel. And yeah. So speaking of all that, I just want to follow up with everything today with a little bit, because the charts are not immediately showing any entries or exits right now. Let me just show you guys something really quick with some of this this data, the latest. If you take a look at GDP data, for example, we could filter for specifically the USA, and GDP growth, the latest, is looking stronger, right? If you take a look at the most recent reporting, we still have growth going on compared to that 2020 decline. If we take a look at inflation data, this is an interesting story as well. We are seeing the inflation number continue to tick down, with the latest reporting, which we did yesterday, coming out at 6.4%. So inflation is on the decline. And now we're diving in a little bit on the fundamental side. So bear with me. But we're trying to understand what all this data is telling us and what the trends could be for the dollar going forward. Well, inflation data has ticked lower, but less lower than they expected, if that makes sense. It's kind of like, basically the number was forecasted to be 6.2% yesterday, and we actually got 6.4%. So yes, it's coming down, but how fast is it coming down, and is it fast enough? And right now people are worried. There's some dollar bullishness coming in because people are saying, well, it's not coming down fast enough. They were expecting 6.2, and now retail sales numbers coming out today hot look good for the dollar, because again, that is likely to keep those interest rates higher for longer. That's kind of the concept. So unemployment data also, here's the other thing, right? If we filter for the US and we look at unemployment data, you can see that in 2023, currently we have 3.4%. We're not necessarily seeing unemployment rise right now. In fact, we've seen it decline for the last several months. And so seeing that number continue to decline, obviously that's good, but the Fed doesn't necessarily want to see unemployment data stay at the very bottom, right? Because that number, what that does is it contributes to inflation. If everybody has lots of jobs, it can be actually sort of counterintuitive. We don't want to, the Fed, it's weird, right? The Fed doesn't want to see a giant increase in jobs because they know that's going to drive prices higher, which is their number one enemy right now. And to combat that, they use their primary tool, which is the interest rate factor. I know that what I'm doing is like all for newer traders who look at technical analysis, this is probably incredibly confusing stuff. And I understand. If you stick around to live streams, I go over this stuff very often. So hopefully it's helpful to you. And you sort of pick up on a little bit here and there. We've seen interest rates rise up to 4.75% here in the United States. The question now is not how much higher do they go in the short term, but rather how long do we stay at 4.75% or 5% area? That is the question. That is what the market is trying to price in. So when the dollar spikes, it's because markets are fearful that, well, we might be staying here for the long term. We might be seeing high interest rates for a longer period of time. The dollar, look at this, guys. Dollar on the price action side of things has completely fallen apart on the above section of this resistance point. And it beckons the question, is that dollar yen anywhere near? Nope, still off on euro dollar. Let's see. Bouncing off support here. Gold probably seeing a little bit of a bounce as well, bouncing off that low. And this is kind of what we need in order to find some setups, guys. We're looking for the S&P 500 trade might even be in the green now. Hold on. Give me 1 second. Yeah, look at that. We're up $200 on the a phenomenal $200. What's crazy about this? I say that jokingly because we've just seen such swings in the last couple of days in the S&P 500. I was down, a couple $100, up a couple $100 now, just better than break even. So up a little bit of money there. So we'll see if that can drive higher. I have my position there tentatively, right? Stop loss below the lows. If markets break lower on the, my stop level is below here. So if price, for those of you watching the S&P 500, if it breaks below 4,100 by too far, we will be stopped out of the trade as shared inside of Discord. So yeah, that's kind of where we're at with the latest. Yeah. Cool. So guys, that's going to probably wrap up the stream. That's everything we had. I hope that if you enjoyed this coverage of the lives of the retail sales numbers from myself and my team, make sure to hit the thumbs up button, subscribe. Oh, are we? Okay. At 9? Okay. Okay. Never mind, guys. We've got a few more minutes. I just had Chandler let me know that we have a guest coming on. That's in just a few minutes. So we're going to stick around a little bit longer. Don't go anywhere. Gary is coming on after. I forgot, or I didn't realize that we had Gary coming on at 9. So he's going to be taking over the show. So we'll stick around for a few more minutes. Comment really quick. What charts would you like me to look at? I'd be happy to do a couple extra ones here today. Somebody mentioned silver. So why not take a look at silver? XAG USD. Silver looks a lot like gold. Overall, pretty bearish. We actually don't have silver on the Edge Finder. It's really not a requested market, which is very interesting. You would think that if everybody's trading gold, people would also be wanting to trade silver. But the truth is, it's really not a very interested market. I mean, I think silver is cool to look at, but it's interesting, right? Because when we build software tools for traders, we predominantly focus on what people actually want to see, and silver is not what they want to see, it seems like. But generally following the same path as gold. I would say that you'd probably see some level of correlation there between the two. If price comes up to this level, it looks a lot like our gold concept, right? So gold at the 61.8 around 1850, I mentioned, looks like a sell to me. So we'll see if that comes into play. You probably get some cross between the two. So yeah. Real quick, guys, Frank's going to help me out. He's going to come into the stream here for just a minute and let us know what he is looking at. Hey, Frank, what's up, man? I think you might be muted. Hold on. Hopefully, maybe. Still can't hear you. That's weird. Maybe your headset might be dead. No worries. We can sort it out if you still can't hear you. No worries. If we can't sort it out, we can just pop him out for a second and maybe come back to it. You can do the test on StreamYard in the back end to see if it works. But no worries. I can keep going for a few more minutes. I'm interested, like I said, in continuing to watch the S&P 500, which, man, really weird action this morning. We saw a price spike to the downside just for a half second there, rallying back above 4,100 at 4122 this morning. And not only did we reverse that, but now even in the green on the day for the S&P 500. So very, very crazy price action there. And again, the extra confusing part is that the dollar is growing while the S&P 500 is growing. Very, very weird. And guys, we've got 5 minutes left on this candle. So when you're looking at this DXY chart, this is an hourly chart. So we're going to watch to see in the last couple of minutes here, we're going to see how this price decides to close as we near the end of this hourly candle. So very interesting stuff. Like I said, I'll just go over, recap real quick, all the trades that I'm interested in. I like euro dollar on the short side. I like dollar yen on the long side. Now, when I say this, what I mean is on pullbacks. So let me clarify. Euro USD, I like a sell, but it's far away from my sell. So there's probably nothing for me on euro dollar in the short term. Dollar yen, however, is probably the top contender right now. If we get a bit of a drive lower, pull back into this 38.2, I like it long there. That is a trade setup that I'm interested in myself. I already have another trade open, which is SPX 500. I am long From yesterday's carnage, all the craziness during CPI, I was able to pick up a trade on the long side in this area around 4,100. And so stop loss for me is below these lows. If price breaks through the lows here, then that will be kind of my stop out point with my trade. So if that falls apart, that's where we'll be at with that. So yeah, I think when it comes to the dollar, we're gonna have to watch how this candle closes. But for the most part, I'm looking for pullbacks there. Euro CAD was another one I want to talk about. Euro CAD 61.8% off the 4-hour chart. We discussed this a little bit in our Discord. Talked about Euro CAD at the 61.8. Did it even hit that? Let's see. It did. Look at that. 61.8 got tagged on the Euro Canadian dollar, retesting a key level of what was support, now potentially turning resistance. I like this one on the short side. I believe it also has edge finder confirmation to the downside. So let me go back to the watch list. So Euro CAD -5. Yeah, this one, I actually really like this one. I think if this doubles back, I might have to take a sell on this one because, oh, you know what? So Euro CAD actually looks more attractive now than Euro dollar because Euro dollar is so far away from an entry for me. I totally missed that one. If Euro CAD doubles back to that 61.8% retracement, I may actually look to get short intraday or on the swing trade side. That's very interesting. So Euro CAD, like I said, that 61.8%, that will be kind of targets there for me to potentially enter. Downward trend overall looks good. You've kind of got this overall downward trend going on. So it's definitely testing the limits of that downward structure. But again, here's the thing with trend lines that I often talk about. Trend lines, I definitely place less weight on than just horizontal support and resistance because horizontal support and resistance is still subjective, but lesser so than trend lines. Trend lines can be drawn so many different ways. If I draw across the highs, we get this trend line. If I draw across the closes, well, which closes do I use? If I use these two, that's the trend line. If I use, these two, I get this trend line. If I use these two, I get this trend line. This is why when it comes to trend lines are still useful for getting an idea of general directional trend, but I find horizontal support and resistance to be a bit more useful, in my opinion. So that's kind of what I have always paid attention to when it comes to this stuff. Hey, Frank, what's up?
Hey, how's it going? Can you hear
Good,
me
I can
now?
hear you now.
Okay. We're using like a different camera or a different
Oh,
microphone. It's the camera thing.
gotcha.
So,
That stuff is mics and cameras are hard. They are always like breaking and messing up on me too. So,
yeah.
Frank, what are we looking at? What's your thoughts on the day?
I'm still, looking for a move. Yesterday had some crazy moves on the S&P, and then it ended up being almost break even at the end of the day. So really nothing on that end, but didn't retail sales beat today, so that would be bullish, but the S&P is coming back on the hourly, and the dollar's looking more healthy. If we were to look at the 4-hour and 1 day, you can see how it's like testing that top. I've been looking at that for a while, and if it breaks it, I think that would be a good sign that the dollar bulls are stepping back in. And I don't know, maybe a potential long play here, but I don't know. I'm seeing a lot of back and forth on this
Yeah,
chart, so I don't really know.
that's for
Just gonna
sure. Did
wait.
you see dollar yen this morning? Dollar
I
yen is
did
killing
not.
me, man. I got trailed out of this one, and look at what
Oh no.
she said. She said, "See you later." Yeah, she
Dang.
absolutely flew. So, I got trailed out, Frank, on the low of that candle yesterday on dollar yen. Like it was to the pip. Like took me out of that trade. I mean, I
It
made
wanted
money,
you
but
out.
you see on the last daily chart or daily candle, the low of that day, that's where I got
Yeah.
stopped out.
Yeah. That didn't want you to stay in.
It didn't. It said, we're going to just grab Nick's stop and then we're going to go. But hey, you know what? It happens to the best of us. So cool. Is there anything else? So you've got that Swiss yen. I saw you pulling that up.
Yeah.
What are your thoughts on
So
this one?
the yen just looks super weak right now, and this has already confirmed that higher level. Even if we see a retrace back to like the trend line or whatever support level this is, I still think it's got some further upside in the future. Um, Again, this is just like a technical kind of standpoint, but I think this is like a good sign that we're looking at higher levels to come. So I don't know. I'm gonna look for a long trade on Swiss yen. Basically, just have a bias against yen overall and see what I can pick up.
Yep, I'm definitely with you on that. I like that dollar yen, even though it hurt me, even though it betrayed me. I'll still see if I can find a pullback trade going into the remainder of this week. Cool. Thanks, Frank, for figuring out the mic stuff. We
Yeah.
appreciate you coming on and doing the idea of the day with Frank himself. So we'll catch you on the next one. Thanks for coming in.
Thanks for having me.
Cool. And now we got to turn things right back around because we have our next guest, our weekly guest, Mr. Gary. We can go ahead and bring him in. What's up, Gary? How are you?
Nick, I'm doing fantastic. How are you doing?
I'm good. I'm good. Really crazy news week. And thank you for coming on earlier than your usual time coming on the stream. We shook things up this week with all of the news just to report for traders at home. What's going on? What are you looking at here today?
Well, you know what I think, Nick. I think the biggest thing here is when we look at the news, and we've had some US data coming out this week. Specifically, yesterday we had CPI coming out, which shows again that the Feds are going to continue to push the rates up. They said they're going to do it in the last meeting. It looks like the jobs, the CPI that's come out, even of course retail sales, all indicate that the Feds have to continue because there's still going to be spending, there's still going to be jobs being created, and all of that creates high inflation. And so the only way for them to control it is to go ahead and push up rates. Obviously, we have to keep an eye on oil. Oil's also is a contribute towards the inflation problem we have right now.
Yeah.
So it's a lot of everything put together. And I think the news that we've just seen today is just another confirmation of what we've been told over the last few weeks. So it's not a surprise. It creates volatility in the market, but I think it's just a whoosh wash, and then it's going to move in the direction of the trend that we've currently seen.
Yeah, no, and I think that's you wrapped that up really nicely. Just going off of everything that we've been seeing recently, and the Fed has their objective. They want to get that inflation number down, but those leading things like jobs and consumer spending, if they don't crack, it's going to be real hard, especially with oil prices not necessarily plummeting any further. It's going to be hard to get that inflation number down, especially with the recent. Yes, we saw a decline by 0.1%, but it wasn't the 6.2% year over year that we were expecting. So a very interesting fundamental environment for sure. Sort of reinvigorating a little bit of the dollar bullishness, which we've got your chart pulled up. What are we looking at here on the dollar?
So if we look at and I think it's really what we got to do is we look at the long-term outlook, right? And I've been talking about the dollar pushing up to around about 12,975. So that's the level that we've been eyeing. We had a little bit of consolidation right here. It's breaking out of it. Looks like it's trying to break out of that consolidation. But this is the bigger picture, right? The bigger picture is that dollar's going to strengthen, and we know why, because the Fed's going to raise rates, and we have an inflation issue. And so knowing that the technicals are lining up what the fundamentals are doing, it just lines up what we have to do on the other currency pairs. Specifically, if you look at the euro US dollar, if you look at the US dollar CAD, they are setting up good setups based on what we're seeing here, based on dollar rally. And so if I go ahead and flip over just quickly here, I think we're going to see. Now, remember, we are going to see continuation of the dollar rally, but at the same time, there are going to be waves in the market, right? It's not going to be one big scoop up. And if you look over here, this is US dollar CAD daily time frame set up right here to break this wedge that we're in right here and chase after its target up here at 144. So everything's lining up perfectly. It's definitely a good time to be in the market because we wait for these moments to set up to give us long-term opportunities, and this is what it's doing right now. US dollar CAD, great opportunity here for an upside move. Clearly, we've got some resistance we've got to break through. but there's going to be nice waves going up. So look for trade opportunities to buy in. And then what I do, Nick, is I would go down to the lower time frame and I would trade the market cycles that we see on the lower time frame. So as an example right here is, if we take a look at this low to high right here, we see that we're going to get the price moving up to around about 134.61 right here. And then we have to realize that when we get to that point, that the market's going to reject that level and we're going to see some sort of a pushback, and then that's going to be another opportunity to get back again for the next trade opportunity. So profit taking is going to be here around about 134.61. Then we're going to see another dip and another rally. And if you actually connect this with the dollar index and see how the dollar index is set up, you can see right now the dollar index on the 1 hour time frame is also sitting at a level right here where we should be anticipating some sort of price rejection. So we're going to get some retracement moves. We're going to get some corrections. And so traders should be patient on these things. If you haven't got in already and you haven't bought in on these pairs already, then wait for the market to go ahead and pull back, then get back in on that pullback, and that will help you be able to profit on those setups.
Sure. Yeah, no, and that's I very much agree with you on dollar CAD. I think you probably have some room for some pullbacks in between, but overall, it does seem to be bullish for me as well. So especially if we can get it some clean breaks above resistance there that you had mentioned, it should be interesting to watch out for. Gary, I'm gonna do our usual thing. I'm gonna back out of the stream, give you the floor for a little bit. Before I step out, let me remind everybody, if you are not already following Gary on his content, then make sure to go do so. We'll drop a link now in the chat for you to go subscribe to his content. Again, it's great free value over there, so that you should go check that out. Make sure to subscribe. So there you go. Gary, have a great stream, man. Thank you for coming on.
All right. Well, appreciate that, Nick. Thank you very much. So, guys, listen here. So, the big thing right here is, of course, what type of a trading environment are we trading in? Are we on risk on? Are we risk off? And all based on, of course, what the dollar does, what stock market does. That leads us into believing that we are heading in an overall risk on, risk off type of a market environment. And so, why do we want to know that? It's because that makes our job easier when we go down to different currency pairs and trade those different currency pairs. So, as an example, if the dollar rallies, stock market's going to fall down. Let's go take a look at the stock market price as it opens up this morning. Take a look at the Dow, and we should see a downside move in the Dow in today's trading, just because of. Let me go ahead and refresh it again. Just because of the way the market's set up on the dollar. So right now I'm seeing a flat number right here. I'm seeing a dead zero right here, so it's flat. This should be updating soon. We should get a different number on this. So if we're going to see a downside move in the stock market, we're going to see a rally in the dollar, then this means that we're in a risk-off trading environment. So if we're in a risk-off trading environment, this is what helps us be able to decide on which currency pairs to trade. If you look at any currency strength sort of indicator, you will go ahead and establish what currency pair is actually the strongest, what one is the weakest, and then you can use that to be able to trade in the direction of that particular trend. So, for instance, if we got a stronger dollar, we should be expecting weak weak Aussie and weak New Zealand dollar. That means that if we look at it across, like, for instance, if we sell Aussie against the dollar, so if we go Aussie, US dollar, all right, and we sell that, we should be making profit. And keep it in mind that the market's going to wave, so which means that if we are at the bottom of a wave, wait for a correction, and then sell on the top of it for the market to go back down south again. And the same thing would apply with any of the Aussie crosses and New Zealand crosses, in particular New Zealand CAD. New Zealand CAD, if we're going to see some stronger oil, right, and we're expecting New Zealand to weaken, then New Zealand CAD should be a good sell back down south. So that's a good look. And in fact, if I go to the chart right here, let's go to let's take a look at the New Zealand CAD right here. So New Zealand CAD's busy testing this support level right here at 8,400. But if you look at the larger time frame, and look at the larger time frame, we're anticipated to go down to around about 83.40. Down around about here. In fact, as we set targets at 83.60 and then 82.45. So just as we saw on this chart right here, that if we're going to expect a weaker New Zealand dollar because of a risk-off environment, then we have to really take a look and see what's going on with US oil to define if US oil is pushing up. If US oil is rallying, then that means that that Canadians are going to get stronger. All right, the Canadian dollar is going to get stronger, and that's why, therefore, New Zealand CAD could be a good play. Now let's go to the oil prices and take a look at US oil right here, and see if we're getting any dips in oil. And if it is, that's an opportunity for the next rally, right? So here we go. So this is the daily time frame. So we see here that US oil has gone ahead and dipped back down right here. We've getting to a level of support. So which means that the next move, or at least the move that we're looking for, is that move to the upside, the rally. So we take the daily time frame, we move it down to a 1 hour time frame, and we go down to the 1 hour right here. And then we start, let's do some housekeeping on this. And then we start doing some analysis here. Now, you could go ahead and just in the short term, if you're looking for something short term, go ahead and put some counter trend lines on here. Wait for price to get to the right side of the trend line. And once the market's on the right side of the trend line, if you've got a 200 EMA right here, make sure we're above the 200 EMA. So if the market gets to the right side of the trend line, shows us some sort of bullish pattern, in the sense of we could have the market creating, and by the way, traders, I ignore wicks, but if the market creates this right here, that it takes out the high, we're looking for the market to pull back here. This will be a retest of the backside of the trend line, or very close to it. It'll come back to support. Maybe these highs will become that support level, and this could be the next rally that we're expecting in US oil. So US oil is going to come back up here to test that 79.40 level, and possibly up here at the top here, it's around about 80.40. So US oil is absolutely in a position where it can go ahead and start rallying. And that's why when we look at now the New Zealand CAD position, and we look at the support that it's trading at the moment right now, here at 8,400, we're expecting a breakout of that support, and for price to go ahead and move a lot further back down south. So those are the things that we look out for. Those are the things that we spot. And that's how we break it down to be able to establish what currency pairs are best to go ahead and look at this point in time, while the markets are setting up pretty good. And I'll be real honest with you. I am not a trader that really bounces on a trade because of news. I'm really more, I either do some what I call bread and butter trades, which I'm doing intraday trading, and I'm using cost average to be able to adjust for all the fluctuation that we're having during the day. And then I may go ahead and do some bonus trades where we look at these long-term positions, and we take on these long-term positions with different types of strategies around it. As an example, pound Aussie. Let's take a look at the pound Aussie right here. I'm gonna go to the daily time frame on this one right here. So here we go. So this is a good example of a different way and a different strategy to be able to trade these positions. So and this is when you're looking for long-term positions. So on the Aussie, pound Aussie right here, we notice that the pound Aussie, since around about 2022, it's got into this. So for the whole year of 2022, we went into this range, and it tried to break out of the range right here. And so what we did is we put in a AB swing right here to establish where that 1.618 is going to be. And then we said that if the market comes back above this support, all right, that is now resistance if it's below it, but if the market comes back above that, then we are going to buy it towards this top right here, or even go ahead and test the top over here. So we've got anywhere between 600 to 800 pips in opportunity as the market goes back into this range and goes ahead and tests the top of the range, or at least that high right here. So that's what we can look for. Now, if we're wrong and price doesn't, so we already put a buy in here. So we already gone ahead and bought in here. If we're wrong and price does work its way back down south again, it's going to come down to the 1.618. And right here, you can see these orders sitting right here to be picked up. And if we get picked up on these orders, and then the market's going to come back to retest this breakout point, we're going to be able to make profit on these orders, and then maybe take a little small loss on that one, but take profit on these, and overall we'll net profit on that position. And this is more a position. A lot of people think position trading is really just looking at swings and trading the swings of the market. But position trading can also be basically taking a pattern or a cycle in the market and trading the turning points of the market, establishing opportunities, long-term opportunities, more of those that you're going to set it, forget it, and just let it ride to the turning points that you're anticipating, and then go ahead and close out the trade. So there's one on the euro the pound Aussie right here. Now, I saw someone mentioning some other currency pair out here on the chat here. I believe we saw. Let's see here. I believe it was the Aussie JPY. I think I saw something pop up in the chat here. Aussie JPY. Well, let's take a look at the Aussie JPY. And let's go ahead and look at the bigger picture on this. All right, so this is the daily. Now, we spoke about this is another great example of a long-term position right here. All right, so if you take a look over here, we did have the market creating this wedge. This is what creates that opportunity. The market broke out of the wedge, came back, retest, came up all the way to the 618 opportunity. 618 retracement right here, testing the backside. Perfect opportunity to get in on that trade. And we all know that if the market creates these wedges, what does it do? It chases after this target. We said that we saw a falling wedge develop, which is this right here. And we said that we're going to target 800 pips, which means that we're chasing after this level right here. That's it, traders. Those are those long-term opportunities that we can get into that can create these nice, what I call bonus trades. Because remember, if you haven't already, you may want to get into the habit of developing two types of trading strategies. One that creates bread and butter trades for you, and the other one that creates an opportunity for you to be able to get your bonus trades. Maybe it pays out every quarter, maybe every month, but it's not something you're going to be looking to profit every single day on. It's things you're going to go ahead and profit over a long period of time, but you do have your bread and butter trades that generate revenue for you on a day-to-day basis. All right. So someone says to me, can we take a look at the Euro US dollar? Absolutely. So Euro US dollar, what is the opportunity on the Euro US dollar based on the news that just came out? All right. Well, remember, what are we expecting? We're expecting stronger dollar. That's the key right there. All right. Stronger dollar. So if you look over here and you look at the way we've got this set up right here, we have a market cycle in play. And the market cycle says we have a wave 1, we have a wave 2, we have a 3, 4, and a 5. So we've completed a market cycle. Now, if you follow me on my YouTube channel or anywhere that if you've gone to our website, tradersnetworkclub.com, check it out as well. Great stuff that we're doing there for our students. But if you follow me a lot, you'll probably know I speak a lot about the wave structure. And so here on the Euro US dollar right here, we're setting up on a perfect wave structure that's trying to complete this cycle. And the way we complete the cycle is we have to complete an ABCD correction. So we've got a 5-wave move to the upside. Now we're looking for a correction move. And so that's what it is. It's a correction. And what does the market going to target? The market's going to target this low right here, and that's priced at around about 1.0481. That's the target down south right there. All right. So if you're asking me what's the euro going to do, the euro is going to wave, and it's going to go ahead and create these waves. Maybe we're going to break out of this this range right here. Maybe it's going to go back up again. Maybe it's going to come back up again here, and then it's going to go ahead and continue to move down. But overall, we're chasing after that 1.0481. It may work. It may move in different cycles, and those are opportunities for you to take some short-term trading. But overall, we're expecting price to move there. Because why? Because we see the structure. Now, you can do like I've done in this trade. We've gone ahead and created this long-term position right here where you see you've got stop losses up here. I've got an entry over here and over here. And I'm looking for my target over here on this is a midterm target right here. And then we're looking for price to move back up again. And then we're looking for the next opportunity. So that's the setup on the US dollar, the Euro US dollar. Now, it doesn't mean because the market's been in this big upward trend that everyone needs to just buy. No, there is opportunity to trade the correction move, which means against the trend, because markets don't just rally, all right, or dip in one direction. There has to be correction, right? Whether it rallies and then dips, or it dips and then rallies, based on the correction. That's what we look to trade. You can trade both of those moves. Now, someone says, go ahead and take a look at gold. All right. Well, that's key. What happens when the dollar gets strong? What do we see when the dollar gets strong? All right. When dollar gets strong, what happens? Yes, gold goes down, right? Dollar strong, gold down, right? And that's pretty much what's happening right here. Now, the the question here is, how far can gold go down? Well, gold is really, if you have to combine it with the dollar, right? And you got to look at the dollar overall, and you got to say, hey, if the dollar is going to strengthen, then that means that this would be, if I was a buy in the market, would be stand aside, not look for anything yet until I see an opportunity on the dollar. And the dollar, I have to look where the turning point is in the dollar to establish where the turning point is going to be on gold. But I can also go ahead and cross-reference the two charts. So if I look at this chart right here, and let's go ahead and I'm going to go ahead and pull in all the data we have here because I think it's important. If you look at the bigger picture here on gold, we do have an inside structure in here. And you notice here is a wave 1, 2, 3, and yes, 4. So which means, traders, that we believe that we've bottomed out here at 4, which means that we are going to go up on gold. So gold is going to climb. And we're going to climb to about $2,314 right here. So we definitely climb to 2,300. The question here is, what do we do in the short term? So in the short term, we got to go ahead. We got to be sellers in the short term. And the reason why we're sellers in the short term is because we're in this midterm correction right here. So this is a short-term sell. So if you go down to, let's say, a 1 hour, maybe a 15-minute time frame, you can find some short-term opportunities. But as of right now, we're expecting price to drop and then eventually go back up. So let's take a look. Let's go ahead and break this down. I'm going to go ahead and clean up the charts right here, and I'm going to walk you through this as we go through this chart right here. All right, here we go. So as you go through this chart right here, this is what you got to look at. So we had an inside structure. Here's a wave 1. Then we had an inside structure, wave 1, 2, and then we had another inside, 1, 2, 3 up here. So because the market's gone ahead and closed out with 3 over here, we're now in this, what we're calling now wave 1, 2, 3 up here. This is 4. So we expect price to hold up at probably around about 1,800. This is about where we can expect the buy zone to be on this. So we're expecting gold to go down to around about 1,800. And then at around about 1,800, this is where we're expecting price to bounce back up again. And what we can do is we can definitely cross-reference it with the dollar and see if the dollar is sitting at that at a resistance level and that correction is due on the dollar. And if is, then we could see a nice little bounce here at 1,800. But I think we're very close to coming back to a good sort of support level right here, about 1,800, that we should be expecting gold to go ahead and bounce back up again. Now, depending, of course, where we are with the dollar, regarding whether the dollar is sitting at key levels of resistance and now, or let's say it's got to the turning point, then we can establish that the market may end up actually going further down south on the dollar, which means that gold is now going to continue this rally towards that $2,300 mark. So let's go to the dollar index right here. And I want you to write this down because these are the things that you need to note. All right. We're expecting the market to move to, and I'm just taking a quick squiz here. Yeah, we're looking for the market to move over here to this level right here, 12,975. Now, traders, I want to make sure that you understand. We're not saying that it can only go to there. We're saying that it's going there. And then at that point, that's when we're going to start seeing if we're getting any signs of bearish setups. Now, if I go ahead and compress this chart or even just go to the weekly time frame and take a quick look at the dollar here on the weekly, all right, this gives you a much bigger perspective of what's going on right here. Then you look at the dollar right here and you say, hang on, wait a minute. There's a bigger picture here about what the dollar is going to do, right? And this is what we're going to look at. So if we look at the markets right here, we notice that here is the wave structure right here. We had the market creating this wave 1, wave 2, wave 3. And so this is a wave 4 consolidation. We broke out to wave 5. So came wave 4, this is wave 5. So the dollar is actually going to be in a correction move. And we're going to see the market drop back down to take out wave 4 right here. So wave 1, 2, 3. So this is what you got to realize. That dollar overall is going to be selling off. Dollar's going to weaken and it's going to weaken drastically. Maybe that's when the Feds get inflation issues sorted out. But the dollar's going to fall. all right, and it's going to fall big. But in the meantime, we've got these short-term rallies. So this comes back to gold. If the dollar's going to sell off, right? If the dollar's going to sell off at some point, then we know that that $2,300 is definitely a target to the upside on gold. So which means if gold does drop back down to 1,800 or wherever that support level is going to be, those are good places to start going ahead and getting involved in gold, because at that point, we're expecting the market to get to a point where it's going to turn around and head back down south. So right now, dollar is just in a corrective short-term move, or let's say call it a midterm move, because we are looking at the weekly time frame. And if you look over here, look at this pattern. We got a little crown setting up right here, and the market's trying to go back to this right tip right here, and that's going to set up our crown pattern for a further downside move. So this is just a short-term correction, my friends. After that's done, dollar's going to be on its way back down. Now, if this structure breaks, then we'll look at the alternative. But as right now, that's what we're seeing at this point in time on the dollar. Okay, real interesting times. Okay, and it's good. It's these are the things that we're going to look at in order to be able to understand the market and then understand what you have to do in the short term. You've got to know the bigger picture. You have to understand what the bigger picture is telling you, so you can understand where the turning points of the market are, so that you can trade it in the short term, right? And that's what you're going to do. Last currency pair before we go ahead and close off. I see someone posting here. Let's see, pound US dollar. I've got pound US dollar, pound CAD. Let me see if I can go through both of these real quick here, because I do have a hard stop at 9:30. But let's go ahead and see what I've got here. All right, pound. Here we go. Pound US dollar was a no-brainer for us. We've already gone ahead and put some sells in right here. So we're selling, and we're selling towards this way forward. Remember, again, traders, if you look at the structure, the daily structure right here is that we've seen that we're in a fourth wave consolidation. And so price, because it rejected the third wave highs, we're now moving down towards the fourth wave low down here, and that is at 1.1837. So we bearish towards, write that down, 1.1837. That's and at this point, then we're expecting the price to go ahead and start moving back up. Again, if dollar hits resistance, then this could be a buy on pound US dollar. Once again, remember, traders, what type of environment are we trading? We're trading in a risk-off environment. We're looking at the stock market to show bearish on the day. In fact, I'm not getting any updates here for some reason. I'm not getting updates. All right, so here we go. Let's go to the last one here is pound Canadian dollar. Remember, everything's going to come down to oil price. Oil price, if oil price strengthens, right, then take a look over here. If oil price strengthens, right, if that goes strong, and we see that this risk on environment changes, and we get the pound now moving into a risk on environment, then pound would be rallying, and oil prices would be rallying too. And if they both rallying, it might be a slow move for the pound Canadian dollar. But let's take a look at the setup. I think what you need to do on this one right here is go to the weekly. I think it gives us a bigger picture of what's going on right here. Absolutely. Look at this. Okay, this is what you have to look at here. The market has got this larger wave structure coming down here. And we've moved back above this level here at 157.26. So I'm going to go ahead and say this. Write that number down. 157.26. That's key. Anything above that, we're buying. We're buying back towards this area right here, and that's going to be at 83.41. So 83, so 1.8341 is the upside move. I'm going to say that pound CAD is in a short-term dip, but it's going to be setting up for opportunities for price to move back up again. I think we're going to see price moving back up to this level right here at 83.41. If I go down to the 1 hour time frame and we pull up something here on the 1 hour right here, nothing on the 1 hour spells out bullish, right? So which means that we're still in that bearish correction move. So looking for some further downside move in the pound CAD may be the option in the short term. But in the long term, we're definitely moving bullish on this at 83 and change. So I think what we'll do is continue to trade the trend right now in the short term, bearish. All right, the shorter term, continue to trade it bearish. And then as soon as the trend on the lower time frame does change, then that means that we're heading towards the long-term target, which is at 183 and change. Check it out. It's going to be something worth looking forward to. All right, traders. Well, that pretty much wraps up. I'm over my time. I do apologize for that. We are bringing in the next guest, I believe. I'm not sure if it's Tom, but what we'll go ahead and do is go ahead and end the session here for me. I want to thank everyone for the time. Appreciate everyone being here. And I can't say it more, but it's probably the best time to be in the markets. Markets are really at a good position right now. We're really heading into a good trading season over the next couple of months. Traders, with that being said, this is the FX Big Dog signing off.
Good evening, guys. Good morning, even. Good morning, good afternoon, good evening, wherever you are from, guys. I'm Trader Tom. My channel is Simply Forex, and you have got me for about 30 minutes. So ask me as many questions as you like about trading, yeah? Not about my personal life, but about trading, guys. Not what I had for dinner, trading. So yeah, guys, get as many questions over as you like. Maybe you're in a trade that you need help with. Maybe you're looking to get into a trade, psychology, money management, anything you like, guys, about trading. Ask the questions, okay? I'm going to show you a little something, the way I trade, guys, okay? So this is a pair I've been looking at for some time. Anant Ivan Drago. This is my nickname, Ivan Drago, Rocky 4. How are you? So guys, New Zealand dollar, Canadian dollar. This is the day chart, all right? And we've been shorting this for some time now, guys, okay? So price, yeah, was in an uptrend, okay? But then it started to break down. Okay, so you can see we're starting to get lower highs and we get lower lows. All right. So yeah, structurally we are in a downtrend. Okay. And then when price retraces, guys, one of my bread and butter trades. Yeah, this is my bread and butter. If you only traded this pattern in the market, you would make money. Yeah, if you only traded this pattern. Yeah, what was once support, yeah, when it retraces, it becomes very good resistance. And then look how that price has rejected and come back down. Okay. We see this pattern time and time and time again in the markets, guys. Yeah, trade this pattern. Support, breaks, retest, their resistance, short it. Okay, it's such a simple pattern, guys, but it is so effective. All right, trade that pattern because Ivan Drago says so. Let's have a look. There's another example of it, guys. Let's look at pound US dollar. So this came down beautifully. But again, guys, yeah, this is the day chart. Look at this pattern. We love this pattern. Yeah, price was in an uptrend. Yeah, it couldn't break through this area of resistance. This is always a red flag that price could be breaking down. If we don't get a higher high with an uptrend, yeah, red flag should be ringing in your head. All right, and then eventually we get a break. Okay, we've had a break. Once these lows here are broken, yeah, as soon as it's broken with this candle, we're looking for shorts. All right. So as soon as we get this break, yeah, first of all, it gives us a very nice retrace into this last low. So again, what was once support, yeah, when it retraces, becomes very good resistance, and price comes hurtling down like a maniac. All right. And then again, if we miss that trade, the market gives you another beautiful setup. We love, love, love this setup. Yeah. So remember, this was that area of support. When it breaks, comes back up, retests it literally to the pip. Yeah, retests it, and then look at the reaction we get. Yeah, admittedly, guys, it was a little bit driven by the CPI data, but Look at that reaction. Yeah, it's just a beautiful setup, and it's come all the way back down to these lows, and we haven't had to wait long. This was also a trade idea as part of my channel, guys, today. So yeah, if you're interested in looking for these setups, I look for them every day, guys. So join my channel. I give you these trade setups. The link is in the video description, in the live chat. Actually, it's in the live chat. So yeah, come join us. We'll look for these trade ideas together. Okay, let's take a look at some of your trade ideas. Do we scalp? Yeah, we can scalp, Raj. Scalping can be very profitable. You're in and out of a trade very quickly. How to succeed with trading? Very open question, man, but a good question. You need to be disciplined, have patience, and trade your strategy like a robot. All right? They're the three things. Okay? If you can master those three things, sound pretty simple, but they'll be the most difficult things you've ever done in your life. If you can master those things, you will become a successful trader. Right, any US dollar pairs at the moment? Not really. All the US dollar pairs are sort of back down and have already hit resistance or hit support. Let's look at another pair, Euro US dollar. Yeah, see, it's already come down. This was a trade idea, but it's already come down and hitting the lows. Let's look at another US dollar pair. Again, no, not really. Yeah, all the US dollar moves, they've made their move. They've made their moves, guys. Yeah, if you haven't got in on this trade in the US dollar pairs, they've made their moves today. So yeah, no US dollar pairs because they're already at support or resistance. Alesta, can you look at pound Japanese yen? Yes, I can, Alesta. I hope I'm pronouncing your name correctly. If I'm not, then I apologize. Pound Japanese yen. All right, so let's take a look at this pair. So it's currently at a very interesting level. All right, so this is the day chart, and the pound has been, it was in a downtrend, okay, but at this level here, it's been finding some support. And then really, it's just been ranging, okay, arguably making higher lows, okay, but it is ranging. And this last high of this candle has broken these highs, but it hasn't broken this high. So this gray zone, yeah, it's an interesting area. So at this gray zone, because it's resistance, you will have sellers enter the market. Yeah, they just will. Yeah, if it's resistance, sellers enter the market. Okay, and you're going to have buyers. Yeah, because you can see all this. Look at these green candles. Look at all of this buying pressure. Okay, so what that's going to result in, guys, is a bit of, yeah, buyers and sellers are just going to fight in here. They're going to fight to the death, and yeah, who will win, we don't know. So how can we tell if we have a winner? So let's drop down to the H4 chart. So as far as we're looking at the H4 chart, you know, now would be a very good area to buy back up to these highs. Okay, but I'm not willing to buy into this resistance because I know sellers are sitting in here. I do not want to buy into these seller traps. Okay, so I'm not going to buy into this. Okay, and I'm not going to sell it because of those bullish candles on the day chart, and we're in a H4 uptrend. What I expect to see is perhaps something like this, and we get a breakdown. Once we get a break of these lows, we can start shorting this pair. Or the alternative is, you know, we keep with H4 structure and we perhaps get something like this, okay? And we get a break of these last highs. Then I'm willing to buy it. But at this gray zone, I need to see who wins, buyers or sellers, and I need the market to tell me. So a break of this high, buyers are winning, perhaps a breakdown of these lows, sellers are back in control. So we're going to have to be very patient and wait to see what happens with this pair. All right, let the market tell you when it's ready to come down or go up. Okay, that's pound yen. I hope that helps. What else are we looking at? Where are we, guys? Sorry, here, I'm just trying to get the questions in order. Pound US dollar, we've already done that, Anant. So what do you do when the PA is between two support resistance line and pound? What would be your valid setup? Okay, good question. So let's look at pound US dollar. All right. So the question is, yeah, we are now between, yeah, prices reacted, yeah, sorry, let's do this. Let's make it larger so you can actually see it. So we got our short setup. Yeah, we've got our short setup, and it's no surprise that price has bounced off this grey zone, and we've got a very large bounce all the way back up to here. But then ever since we got this grey zone, we've got an aggressive push back down. So again, guys, I need to just wait now. I will need to wait for a setup. I look at 28 different currency pairs. So if I don't have a setup here, I can find one on another chart. But you've got a lot of selling pressure, but we know again buyers are sitting in here. So at this level, yeah, we have to see who wins again. All right. So if buyers, yeah, if we start getting a bullish daily candle, then perhaps we could push price back up to here. Yeah, perhaps the market starts ranging. Yeah, we could do that. Or if we get a break of these lows, yeah, it would need to be a break of these lows. Because imagine we get a break of this low, we still don't have any room to move into. All right. So I would need a break of these lows, and then we could look for, you know, to continue this downtrend. Okay, so let's see what happens in this grey zone, and then let that dictate how we trade this pair. Okay, so yeah, that's what we're seeing there. Okay, what other questions have we got? Let's have a look, guys. So let's have a look at US dollar, Canadian dollar. Okay, so we've got Philip and Cylinder Cure. Again, I haven't been drinking, guys. Well, I've got a little bit of vodka here, but not drinking properly. Okay, so let's have a look at US dollar, Canadian dollar. So yeah, like I said, guys, a lot of these US dollar pairs, the move has kind of finished. All right, so again, yeah, we find ourselves in a little bit of a range with US dollar, Canadian dollar. But, you know, we can trade the range. So price was in a downtrend, okay? And now it's found this low here. There was previous support here, and price has bounced off of this, back up to here, back down. So potentially we can trade this back up to these last highs, okay? Yeah, we can trade the range. The problem we have here, this has been such a bullish move. If you didn't catch it today, yeah, if you haven't already caught this move, we don't have any room to move into before we start seeing support or resistance. So what I would wait for is price to come back up into this grey zone. We get a bearish reaction, and then I would look to take price back down to these lows and just trade that range. And then if we get a bullish candle, a bullish setup, you know, something like this candle, yeah, then we can trade it back up to the top of the range. So US dollar, Canadian dollar, I would just trade this range. You have to bear in mind, Canadian dollar is quite strong at the moment, yeah. So yeah, let's see, but yeah, you can trade the range there. What else have we got? Jamian Fortune. What a great surname to have for trading. Fortune. I'm going to change my name to Tom Fortune. Okay, let's take a look at Canadian dollar, Japanese yen. Where are we? Guys, before I look at this next chart, then yeah, then if you're enjoying this analysis, then come join my channel. The link is in the live chat. Yeah, just click on that, guys. You'll see my channel. Come join me, Simply Forex. I give you my trade ideas every day. So Canadian yen, yeah, we're looking for buys here. All right. So as you can see, yeah, price was in a downtrend, and then it's ranged pretty much. Okay, we had a bit of indecision here, but it's come back up and hit the top of this range. All right, but yesterday's candle was the day before that actually. Yesterday's candle. If we zoom in, yeah, yesterday's candle was the candle that broke out of this grey zone. It's broken all of these last highs. Okay, so I believe we have room back up to this 10100 psychological level. All right, we've got some room to move into. We're seeing a bit of yen weakness across a lot of the currency pairs. But what would I want to see? So we're getting that retrace. We've already got that retrace that we wanted, and now we want to see price push off here and come back up. Yeah, so that's what I'm seeing, definite buys. If we drop down to the H4 chart, what are we seeing? Okay, so yeah, okay, but H4 is definitely in an uptrend. Yeah, it's worrying me that it hasn't created a higher high just yet. Yeah, I would like to see this last candle here. I'd like to see a H4 candle break this high. All right, I'd like to see that happen, and then I believe we can continue this on up. Or price may find a little bit of support here, resistance, sorry, and come back down to these lows before it pushes back up. Yeah, or even potentially it could push down to these lows before it comes back up as well. But we're just looking for buy setups, guys. Yeah, only looking for buys here because of that, the break of this grey zone. Price is broken out. Yeah, and we can just follow this H4 trend. Like I say, it'd be interesting to see what this next H4 candle does. See if it breaks this high. And if we do, yeah, we can continue with that uptrend. If not, we're going to get a retrace. Yeah, then we can come higher, or even back down to here, then we can come higher. All right, but buying Canadian dollar, Japanese yen, I hope you are too, Jamian. Yeah, all right. What are your entry signals, your entry confirmations? All right, good question. Yeah, I don't normally get questions like this. Normally it's like, look at pound US dollar, but this is a good question. I'm going to show you, what trade shall I show you? Okay, yeah, let's look at this. Let's look at New Zealand dollar, Canadian dollar. So this is a great example, in fact. So this is how I trade, guys. I'm going to show you how I trade in a nutshell. All right. Obviously, there's a few more aspects to it, but this is pretty much what I look at. I'm a very naked trader. I'm not actually physically naked, but my charts are naked. All right. And I just trade them and look at price action, support and resistance, what the candles are telling me, and yeah, structure. That's it, guys. All right. So what I do, guys, every morning I look at 28 currency pairs, so you don't have to, yeah? And then what am I looking for? So I'm looking for structure, okay? So ever since we got a break, yeah, of this low here, yeah, we've been seeing lower highs, lower lows, okay? And price come back up. We've been shorting it since here, and then price has come back down, okay? So everything on this chart is telling me to short it. And then if we look at the candlesticks, you have bearish, bearish, bearish. Buyers come back, but then bears take back over. Yeah, you've got the bulls come back in, bears come back with a vengeance. Bears, bears. So this candle here, once it broke this grey zone, I was looking for shorts. So I've got my day view. My day chart is telling me to short this pair. Then I drop down to the H1 chart because this is my entry time frame. All right, so let's do that. Okay, so let's go to where that large daily candle was. All right, so this was that large daily candle. All right, that was that large daily candle, and it moved all the way down to here. All right, so that's what gives me the impetus to look for shorts. Okay, then what am I looking for? Obviously, it needs a bit of a retrace. This is quite oversold. All right, so we need a bit of a retrace. And for me, yeah, the H1 structure changes. Yeah, we don't get lower lows, and then we start to get higher highs. Higher highs, yeah, higher lows, higher highs, higher lows, higher highs. When we don't get a higher high, this sets alarm bells ringing. Okay, we don't get a higher high, and we've had a bearish candle form, a bearish engulfing candlestick form at this last high. All right, so this is telling me, okay, we're not making higher highs. Sellers have found an area here. Yeah, they found an area here that could potentially be important. All right, bearing in mind we are in a H1 uptrend. So for me to enter this trade, I have to see a break in H1 structure. All right, so my day view is to short this market, and therefore the H1 trend has to be in a downtrend. So as soon as I get this candle here that breaks these lows, I spring into life like a coiled cobra, okay, like Ivan Drago. Yeah, I come storming into the ring like a lunatic, okay. But as soon as this is my bread and butter. As soon as I see this break in structure, yeah, I actually traded this pair. I got a retrace, all right. So price has broken down. Yeah, I get a retrace back to this low. Remember, I was talking about this pattern earlier on. We love this pattern, all right. And then I'm looking to take price. The target is to take price back down to these lows. Okay, this is where I close 80% of my trade. Okay, and then I let 20% run, guys. This is a little technique that I use to help me let trades run. Okay, because I wasn't very good at it, so I found a system that helped me let trades run. All right, so yeah, so I've closed my trade for 80%. I got that, and now I'm leaving 20% to run. My stop is up here. Okay, and my entry's here, and my target is these last lows here. All right, so we get a risk to reward of about 1.5 to 1. This was also during CPI, guys. So even during CPI, the trade is still intact. Yeah, because we've got this. Arguably, this could be classed as the last H1 high or this, but price comes up and this wick closes back into this area. So you could have started trading with this wick. Once this wick closes, you could start entering here, put your stop here. You know, if you missed it first time, and then again take price lower. Okay, because the whole time I am with H1 structure. Okay, so there you go, guys. You wanted to know how I trade. That is pretty much how I trade. I take a long, higher time frame view of the market, but then execute on the H1. Sometimes the M15, but yeah, mainly the H1, guys. So that was a bread and butter setup for me. Okay, guys. Any more questions for me? If you have, please send them over to me. Is there anything I missed? Okay, if there's no more question, guys, let me just show you a couple of things that I was looking at today. Yeah, so we was looking at Euro Canadian dollar. We're looking to short this pair. And let me show you this trade idea because it's become tricky. All right. So, yeah, remember my idea. My idea is to look at the day view. Okay, so the day view is to take shorts. Okay, price ever since we broke this low here, we've been in a downtrend. This high didn't break. This was like a double top, and then price has been breaking down ever since. Okay, so this is what we're seeing on euro Canadian dollar. And then price comes back up, tests this last low. It's currently testing it as we speak. Okay, so potentially we can then take price back down to this level here. We're in a downtrend. Yeah, what was once support becomes resistance. We've had a nice retrace. Potentially we can take price back down to here. All right, but I need to let the market tell me when it's ready. So let's drop down to the H1 chart now. Where are we? Okay, so H1 chart. The problem with the H1 chart, guys, is during the London Open, yeah, we were in an uptrend. Okay, and then perhaps, you know, perhaps these highs were holding. I was looking for a break of this grey zone, then a retest, and then I can come lower, because that puts me with H1 structure, H1 trend. Okay, but as you can see, that didn't happen. Price has come shooting back up here, and therefore we have higher highs. So I have to now wait a bloody long time for me to enter this trade. Yeah, because remember, guys, part of my strategy is to be with H1 structure. Yeah, you need some criteria in your strategy to keep you out of trouble. So what do I need to see? Let me tell you. Perhaps something like this, guys, will happen. So keep an eye on this over the next couple of days. See if this happens, all right? So perhaps potentially something like this. Perhaps get a break of these lows. Then we can start shorting this pair, all right? But for me, it's in an uptrend on the H1, so I cannot trade it. And currently, yeah, at this last area here, it's finding a few buyers here. So it wouldn't surprise me, excuse my arrows, I've been drinking. It wouldn't surprise me if it comes back up and wants to test these highs, okay, and then potentially come down. All right, but I need to be with H1 structure. If I'm not, I am unhappy. Right, what else are we looking at? Okay, we've got lots of questions here, guys. Aussie dollar, Swiss franc. Let's have a look at that one. Yeah, Aussie dollar, Swiss franc. So I was seeing a bit of weakness in the Swiss franc. So let's take a look. Aussie dollar, Swiss franc. So guys, what are we seeing on this chart? So this is the day chart. So we're at quite a critical level on the day chart as we speak, but I was seeing an uptrend. Okay, and this channel was supporting my idea. Yeah, I was potentially looking for price to do this. Okay, however, we have found ourselves in this box of indecision. All right, and I love boxes of indecision. All right, because once we get a winner, we know we are on for a good trade. Okay, so what am I looking for? So you can see this by my grey zones. I plot these grey zones every day, guys, yeah, as part of my channel. So if you would like to receive my grey zones and my trade ideas, then subscribe to Simply Forex, guys. It's in the live chat. You'll see the link. Join the channel. Merci beaucoup. So it's all about what will this daily candle do. If this daily candle stayed like it is now, you know, bear in mind, we've still got another, you know, God knows how many hours. But if this candle stays like this, then we have had a break of this box. And I think we have room to the downside, potentially back down to these lows here. All right. But if this candle, the wick of this candle closes back into this grey box, then potentially, yeah, we have room back up to the top of this range. So it really depends what happens in this lower grey box. Let's take a look at the H4. All right, so what are we seeing? So potentially it's holding. All right, so yeah, it's holding, guys. Yeah, we've got these lows here, okay, that are holding. Yeah, this wick here has closed back into this grey zone. So it'll be interesting to see what this next this next H4 candle does. Will it respect the low of this wick and close back into this grey zone? Potentially, if it does, we've got room back up to here. All right. So yeah, it all depends on this grey zone. If price closes back into it, let's start looking for longs. If it breaks this grey zone, we can start looking for shorts. All right, as simple as that. This grey zone is the all-important grey zone. Okay, let's have a look at one more, guys. Let's have a look for sound effects. Let's look at the S&P. It always makes me feel like rapping when I hear S&P. Okay. All right, so let's have a look at the S&P, guys. All right, so let's start with the day chart. Actually, we need to start with the weekly chart here. All right. So on this weekly chart, there is clearly, I know this is a large grey zone, but it's a large grey zone because it's the weekly chart. All right. But there's resistance in here. Yeah. Price has reacted once, twice, 3 times, 4 times, 5 times, you know, it's reacted many times in this grey zone. And currently we're getting a bit of a reaction as we speak. Yeah. Nothing tells me sellers are in control. Yeah. But we're getting a reaction. But we're in an uptrend. All right. So we've got higher lows and we haven't quite made higher highs yet. All right. So we're at an interesting level. Let's go now drop to the day chart. All right. So what would I want to see? For me, I can't keep buying into this grey zone because it's resistance. Yeah, I do not buy into resistance. That's what crazy people do. Do not short into support. That rhymes, I am a rapper. Okay, so this is, I cannot buy this pair. And you can see, look, price is not making new highs. Yeah. Price is finding some resistance here. It's touched it once, twice, 3 times, and it hasn't pushed through. So there are sellers sitting in here. All right. What do I want to see? I want to see a break of this upward structure. Okay. We're not making higher highs. This is always a red flag for me. If we then break this low, yeah, perhaps we get a little bit of a retrace, then we can start taking this pair lower in here somewhere. All right, but if we start getting a break of this low, I am all over shorting this indice. Yeah, so we need to be patient to see if that plays out. You know, you might have to wait several days before we get a break. So be it. That's trading. You need to be patient. You need to sit on these hands, not my hands, your own hands. But yeah, you need to sit on your hands, guys. Simple as that. So yeah, that's what I'll be looking for. I'll be looking for a breakdown in structure, and then we can start shorting the S&P. Guys, I believe I have run out of time. Okay, so guys, if you've enjoyed my analysis and want my trade ideas, then join the channel, Simply Forex. The link is in the live chat. I always enjoy spending time with you guys. I hope you've enjoyed it too. And I will see you next week. And I'm on Tuesday next week. All right. So see you then, guys. See you later.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And if you're looking to get funded, check out Superfunded's examination today and get 10% off when you use the code A1 Trading. Click the link in the description below to find out more. From all of us at A1 Trading, have a great day, and we'll see you next time.